Welcome everyone to Identity 2025. I'm your host for this panel, Tom Triscari. Today we have with us, we have Sanja Partalo from S4S Ventures. We have Eric Franchi from Aperiam, and we have Nick MacShane from Progress Partners. This is a look and a discussion around M&A going into the back half of last year, more importantly, what's happening now and into this year and going forward. So welcome everyone.
I'm glad to be here.
Thanks for having us.
Oh, it's going to be fun. It's always fun with you guys. So I guess we'll do a quick round, just a quick intro just for the audience. So we'll do Sanja, Eric, and Nick. I'll go last, and then we'll just get into it.
Sure thing. So I'm Sanja. I'm the co-founder and GP at S4S Ventures, a fund primarily focused on Adtech and MarTech, and a frequent co-investor with both Eric and Nick. So this is a real treat to be doing this conversation with all of you.
Hi, I'm Eric Franchi. I'm a co-host of Marketecture. In my spare time, I am a general partner at Aperiam. That was a joke. Where we do a number of things, but I run our investing practice.
Great. I'm Nick MacShane from Progress Partners and founder there. I've been there. This is my 23rd year. And 15 years ago, we started Progress Ventures. I've been doing a lot of investing with Eric and Sanja, which has been great, and looking forward to the conversation.
Oh, welcome, guys! Great to have you as always. Always great to get together with you in either these situations or one-on-one. We always have fun together. I'm Tom Triscari. I'll be your host for this session. I work at Landmark Ventures, an investment bank. I also run a newsletter, which a lot of people know. It's Quo Vadis, and run Adtech Economic Forum, which is part of what we do at the intersection of ad tech and finance. So, Nick I believe the way we're going to do this, because Nick is a very seasoned investment banker and very seasoned on the venture side. Nick will be speaking mostly on the banking side, but he can chime in on the venture side because he has a lot of experience there as well. So let's just get into it. When we think about venture capital, and then we also think about M&A and the investment banking side of things, there's entry and there's exit, meaning you've got deal flow on both sides of the equation for venture, and you've got a same thing for M&A banks, and you've got the exit side of things at some point down the road, particularly from the VC side. So I want to start with Sanja and Eric on the VC entry side, right? And then we'll get into exit and M&A. But on the VC entry side, my one curiosity right now is you have a lot of deal flow. You have a lot. I mean, I'm working with you on things and lots of other people, and you've got a huge network, and so you see deals all the time. And let's say out of 10 deals, how many are entering that have an AI component to it versus don't? And of those that you see and then invest in, how many have an AI component? And then Nick can chime in on this as well, because he's seeing a lot of deal flow at Progress. But Sanja, why don't you kick that one off?
Yeah, so I would say it's about half-half. So if we're looking at pure ad tech, there tends to be at least, we're talking about 2024, half of those deals are solving very meaningful problems in the ecosystem, but do not have AI component to it. So it's 50-50. If you're looking more on the content side of the house, meaning generative AI, fulfilling the sort of needs of generating content, most of those deals have an AI component to it. That's where the acceleration is occurring today. And that is the side of the house in terms of venture investing that is very opportune at this moment in time, because we have, and I think the panel would agree, the last 10, 15 years, we have optimized and invested on the media side of the house, meaning optimization, targeting, identity, almost to death. That side of the equation has been very well funded, taken care of. There's been some nice exits on that side of the house. What AI is allowing us to do is accelerate the other bucket, which is content, where actually the efficacy of that content has been largely underfunded, has been under sort of innovative, if you will. And so a lot of stuff that deals with that side of the house has AI components to it, as it should, because that's where the technology sort of accelerant is today.
Go ahead, Eric.
Yeah, for sure. I can give you some actual real-time data. I pulled up our tracker here. This is probably the busiest time in terms of new deal flow and new company formation that we've seen at Aperiam in several years, perhaps to date. We're averaging more than one new inbound new company introduction, whether it's direct or from our co-investors per day so far in 2025. Obviously, that's skewed because everybody's kicking off the year with their fundraising and everything like that. But we're super busy. I would say that the I would say that darn near 100% of all of the new deals that we're looking at are either AI companies, from day zero, or they are making something actionable for AI fueled strategies. So data being, I think, a good example. Or, and this is a lens that we're looking at, that's a bit of a mandate now for us. They're a company that is leveraging AI to build a different type of company in terms of processes and operations from day zero as well. So I think it's infused in everything. Specific to 2024, we added. So we're early stage investors, and we invest in a lot of companies. It's our model. So we added 11 new companies to the portfolio in 2024. To Sanja's point, more than half were AI companies, or they're just building foundational infrastructure for the AI era. You might think of Scope 3 as something like that.
Okay, great, great. And Nick, yourself as well. What are you seeing there, I guess, on the venture side, and also speak to the M&A side, because there's companies out there that have some that weren't known for AI, but they've been doing AI for years, and now they have an opportunity to find an interesting suitor and an exit.
Yeah, I was going to say, a little bit of a counterpoint is that, I think in ad tech, a lot of companies saw this sort of boom of ChatGPT and AI and said, we've been doing machine learning, AI, programmatic for 10 years. Like, what's the big deal? And I think that what we saw in 2024 was a lot of companies saying, okay, in the media workflow process or in the media automation process, like, what are the pieces? And this is a lot of the service side companies saying, hey, is this a way we can automate some of this function that we've been doing? And become more efficient. But I would say, we have not seen a lot of companies that are just a pure AI launched concept. And I think there's a lot of hype around it. Obviously, last few days, with the Chinese counterpoint to OpenAI, I think is a good case of it.
DeepSeek.
And I think, yeah, DeepSeek, thank you. And I think, the challenging part is AI is in this new form is so new. So you have this, this rush to invest, this rush to be a part of it, don't want to miss it. And, our approach from an investing standpoint has always been to watch and wait a little bit and see what shakes out. I think valuations for a lot of these AI companies were, very out of whack, but all the way from the public companies all the way down to the startups. So I just think it's important to be careful, with what's out there.
Yeah, it's interesting on that point. If you look at the NASDAQ 100 and you look at the returns over the last 2 years, and people talk about what now they call the MAGA 7, right? The big tech companies, and they have done really well on the tails of NVIDIA, but Palantir and AppLovin have actually performed better, right? From a total shareholder return perspective. And that's quite, then they're not a part of that club, but that's quite interesting. But Nick, as far as on the banking side, on the M&A side, what are you seeing? You get deal flow in of companies like, okay, great, wow, this is really sellable. Ooh, this is going to be a challenge type of situation. And of course, until you get into the numbers, those things could change. But generally, you can get a sense from the first kind of call and the note taking that goes on around the business. What are you seeing there? And in particular, companies that are they a 10-year vintage? They've been around for 10, 12 years, or are you seeing more and more, hey, this is only a 5-year-old company, but it's doing really well,
Yeah, I mean, I think M&A's really been a mix this last year. I mean, we did see quite a bit of activity. DV bought Sybids. Path Labs was bought by MIQ, which is one of our Path Labs being one of our clients. Share through Equative, Beachfront, CTAG. So there's, and then we just announced a company, Content Lab, sold to Sammy. And so we've been seeing a pretty regular uptick of M&A. I'd say deals are taking longer to get closed than they had in the past. But I think that there's a couple of different things happening that we're seeing. One is there's a lot of bigger, older companies that need to do something, and just sitting and doing the same thing is not working, and you can see that in the stock performance of a lot of these companies. So there needs to be some innovative M&A and maybe transformational M&A for some of these companies. They're just stalled. And so we're getting a lot of inbounds from buyers saying, "Hey, what should we do? We're stuck." So there's a bunch of stuck big companies. Another interesting thing we saw, and I think some of the deals that we described just now, was the Europeans seem to be learning finally that you can't just come into the US by hiring a sales guy in New York. And so you're seeing Equative buy Share Through. You're seeing, I mean, our deal, Content Lab, is a US company bought by Sammy, a Spanish company. MIQ coming into the US through Path Lab. So these are real, transformative acquisitions in terms of opening up the US market. The European market has been depressed, and so it's logical that they want to be here and coming here in a meaningful way. I think we'll start to see some movement now back into Europe, and I think there's a lot of companies I've been talking to saying, "Hey, we need to understand and find something and expand into the European market." The US market has been hot for a few years now, and so I think we're going to start to see some movement back in the other way. And I've got a bunch of companies that are talking about that as well.
That's an interesting thing, that one.
Yeah, and then as far as go ahead, Sanja, please.
I was going to say, Nick, I would love to piggyback on something you said. The other thing that I've seen, and we have a shared portfolio company, Progress and S4S, is strategic buyers or PE buyers who want to move upstream. So they perhaps have a strong foothold in SMB or mid-market, and they want to move up to enterprise level clients. And that's very difficult to do organically if you've been SMB focused your entire life. And that has been another sort of interesting nuance that was, I would say, kicking off in 2024. I would expect more of that in 2025, where these stalled companies, as Nick has described them, it's about growth, but it's also about moving up market to where perhaps some of those SaaS contracts are a bit more durable. I would say one of the lessons of 24 and 23 has been, the sort of old age assumption that SaaS contracts are super durable and therefore those companies are much more valuable. Well, we've seen that actually that's not always the case. And so one way that companies want to sort of future-proof themselves is by having more and more of their revenue come from enterprise clients who are more durable. So that kind of desire to move up has also been a bit of a pull in 24, and I would expect to see more of that in 25.
No, that's interesting, because that's one of my biggest pet peeves of this of comparing MarTech to Adtech. And now that we have 17, 18, 20 Adtech public stocks, Terry at Luma tracks this as well. It's like, well, why are the total shareholder returns in Adtech in that cohort better than MarTech? Why is net revenue per employee better in Adtech than MarTech? It's interesting, and it's because also I think this concept that, well, no, I'm MarTech and I have a SaaS contract. I'm like, yeah, let's go look at the terms, because a client can exit in 30 days. It's like you don't have the contract forever and ever. On the flip side, the media business, the trade desks of the world, they have to continually work hard to keep that media spend flowing, and they in particular do a great job of it. Okay, so
Eric's got a great point on this, actually. Eric,
I bet he does.
Yeah, you do.
I look at the two largest deals over the course of the past 60 days, right? You have Vistar Media, 600 million to T-Mobile. You have Audigent, an
Argent.
unnamed price somewhere, in the nine figures to Experian. Neither of them are SaaS companies. Neither of them are MarTech companies. They're ad tech companies, with like large client bases, growth, reoccurring, not recurring revenue. So I think to Sanja's point, and to your point, Tom, the value of the advertising model is being appreciated in a way that we haven't yet seen. And you have the raves from the Walmart CFO. Oh my goodness, where has this ad revenue been all my life, and the profits been all my life, Uber, so on and so forth. I think, yeah, it's sort of proof of what we've known all along, that you can build a fantastic business with great returns and the ability to I think justify a real valuation in ads.
Yeah, definitely, definitely. And you also have to look at, for example, I mean, out of I think there's 18 MarTech companies that I track. I mean, really, it comes down to Shopify and HubSpot that generate all the returns in that sector, and everyone else is really not in great shape. Whereas Adtech, you could make a much more stronger argument, $1.1 trillion of money being spent going to 1.5 at like 12% growth rates. I mean, well, I kind of want to be there because I know that media money is going to get spent and it's going to be allocated somewhere and someone has to execute it, whether it's a machine or a person. So that bodes well for the future, I think, of this sector. Let's switch gears a little bit here. What do you think? And I guess we'll go reverse now. I'll go Eric, Nick, and then Sanja on this one. So the M&A thesis kind of going into, Nick spoke to some of these things just now, but the M&A thesis, I think, at the end of 24 and now as we're into 25, in particular with the ad tech space, right? Not the whole advertising space and the whole agency thing going on, just particular to ad tech. Is it bigger to get better? Like Nick, you talked about Equative, for example, which is backed by PE. Same thing with CTAG, similar type of model. Is it bigger to get better? What is the main thing going on there? Is it another concept would be, well, geez, look at revenue growth in the space of ad tech companies, the public ad tech companies we know we can track, and look at the return on invested capital, which is okay, right? If sum all up the whole 1800. And they've done well on revenue growth, but now things are mature. So now we got to get to the EBIT growth and the EBITDA growth, not adjusted EBITDA by adding back stock back compensation, real EBIT, real operating profits. Where are we at, you think, with that? And how does that kind of play into the theses that going on around M&A? And what if I've been at an ad tech company and I'm a founder for the last 7-8 years, I want to find a home, right? What's the big theses going on in your head? I guess we'll start with Eric, then we'll go Nick and Sanja.
Sure. And I think some of this is informed by my view of now being an investor, an early stage investor for a long time, and less kind of an operator. I think up to and including 24, the idea of bigger to be better made a lot of sense. I think Nick pointed to a few transactions that were effectively the thesis behind those transactions. I think that will continue to be there. But what I'm looking for in 25, and again, I think we're seeing the evidence of that with the two deals we spoke about before, and with TTD Sincera, which we should spend a little bit of time on as well, which is what are the strategic assets that I need to capitalize on what are I think the two big kind of sub theses driving the growth of this space, which is number one, everybody is an ad seller. Right? You had Amazon go from 0 to, I don't know what, if you count up their DSP and the streaming business, 30 something billion dollars, right? Everybody wants that. Walmart, and then the next 100, and then the next 500 retailers, airlines, like everybody building out this advertising capability, right? So I think that brings new money and changes the space a little bit, right? So it's like, what is my play there? And then on the other side, marketing is like the new software engineering, right? It's now, much more sophisticated, much more quantifiable. The best market, the sort of, the best companies in the world either have a large ad business or they are the best and most sophisticated marketers in the world. So what are the tools that I, as a company that wants to get into this game, need to have to service increasingly more sophisticated, outcome-driven customers, right? So it's like everybody is a media seller or everybody's a sophisticated marketer. And what do we need to do in terms of identifying some of those gaps that need to be filled to make sure that we can continue like meeting the market where it is?
Yeah, I mean, look, I mean, out of the big tech seven, what, three of them, well, two of them are all ad sales, are all advertising businesses. They're in the trillions. Then you've got Amazon in there. You could probably, I mean, you could value their advertising business probably at close to a trillion actually, just on its own, because it's growing to 100 billion. Then you've got
Correct.
ByteDance. We only talk about TikTok. You got ByteDance, that 150 billion in revenue. So the biggest companies in the world are advertising companies, right?
Yeah, or they're
Yeah.
NVIDIA, which is going to be powering, right, this
Exactly.
wave of AI, or they're Tesla, which, doesn't need to do any of this because the products are that good.
Until they really look
And
at
they'll have ads in
one
the
of
car
Sanja's
soon.
companies.
I don't know. I know Sanja
And
has an opinion on that.
yes, ads in cars. I mean, the car screens are the last frontier that has not been monetized in our lives. So
Except
we're
our
investors
sleep.
in a company called Fourscreen. Tom has had him on his
Yeah.
Substack and his podcast. Um, no, I really believe that that's the next frontier. Everything else, every other screen in your life, your cell phone, your computer, your TV, has been monetized, and monetized in a quite sophisticated way, both from what the consumer ends up seeing and the sort of underlying data and the targeting technology. The car is less frontier, and it's the one piece of the puzzle, and particularly strong piece of the puzzle in the U.S., where the average consumer spends more and more time in their vehicle, not less. And so, if you are a betting person and you assume that cars are just getting more connected and will act more like entertainment vehicles the moment they become self-driving, where else are we going to go? Humans are quite predictable. We all know what we do when we've got some time to kill. You scroll. So I am ambitious on that front because I think it just fits. I think ad tech investors at the end of the day are following the eyes and ears. Many moons ago, I invested in Gimlet Media and podcasting. People thought that was a crazy idea back then because it looked like a cottage industry. It sounds crazy to talk about sort of marketing cloud in the car now, but you just have to follow what the consumer is doing, where they're spending more time, how they want to be spoken to, what level of, contextualization they will require, demand, or put up with. It's not more complicated than that.
I think just going back to your EBITDA question, too, I think it's, first of all, I'm of the age when we used to say, gross media multiple, that's all we've got. Let's value companies on that. Then it became net revenue. And now it's just so pleasant to be able to say, like, hey, we're selling companies on multiples of EBITDA in ad tech, which just was not a thing. I mean, just a few years ago. So, and I think what's happening now is that everybody over the last few years is tightened down, preparing for AI. We don't need as many people. And now they've got this great EBITDA and they're stalled and they have no growth. And so they're going to have to invest again. And you can't just go and say, okay, team, go and wait. We just let the whole team go. We have nobody working here anymore. We need people again. So I think there's a bunch of M&A that's coming for that purpose as well. This is a huge market, not poorly understood, and a massive driver of economy. Advertising drives consumer purchase. That's the whole thing, and that drives our consumer economy. So it's so important.
No, definitely. I mean, there's a lot in that. I mean, just me, I'm constantly into the numbers across the public ad tech companies. Some of the things I'm working on a new data set now, for example, and some of the things I'm seeing are some really great things and some really super interesting things that until I ran the model and compiled the data, some questions I wanted to answer. Like, for example, and I'll be explaining some of these things on the newsletter, but one of the things I always look at is what is the capital efficiency of the business? Meaning that is net revenue divided by invested capital, excluding goodwill, right? Very important number. I'm not going to say who now, but there's one, the average, I mean, if you're doing 1.8, $1.80, you're doing great. That means $1.80 in net revenue per $1 in invested capital. One company out there's at 6. I'm like, oh, wow, that's odd. How are they doing that? There's something off in this business, and there's nothing off in my numbers. But anyhow, a lot there, Nick. Going forward, I think, look, from what I can see from my end, what we're seeing at Landmark Ventures, and I'm sure what others out there on the investment banking side are seeing, there's deals that are getting done. We're very, very busy. Just one question to follow up on this, Nick. So what about the company that you see? They come to you, hey, we want to exit. We don't want to put a for sale sign up on the business, but we do want to exit. We think we have a nice thing going. We have some really nice numbers, great customers, whatever it might be. But they want too much, meaning they want 20 times EBITDA and the market's buying 12 times EBITDA.
Yeah, we tell them to call somebody else.
Yeah, because
we just don't take this on. I mean, it's just, I mean, the banking business, you get paid 97% of your compensation is on the successful deal. So if we don't think that the management team or the board is realistic, and there are plenty still out there, we just tell them to call somebody else. And so we turn down a lot of people for that exact reason. Yeah. Life is too short.
All right, Eric and Sanja. So you had mentioned, Eric, earlier to come back to Trade Desk, Sincera. We talked about this the other day. I'm just looking at my numbers. So the way I calculate it, based on the rumor mill of what the company went for, I get in a two-year exit, 160% in turn on invested capital. Now I know, Nick, you got one point of view on this and what that means for LPs, but that was an interesting deal. So Eric and then Sanja, so what do you see in that as far as, is that like a rock in a pond with waves? Is it meaningful? Is it not meaningful what Trade Desk did and why they made a company that never makes acquisitions, really? What are your thoughts on that? And what does that mean for the business around what Trade Desk might be going for to win on ad quality?
Go ahead, Son. You can go first.
No way. You should go first. Sincera was your investment. So I feel like that go.
Yeah, no problem. That's right. We were an investor in Sincera. I can't comment on the numbers. We're happy with the outcome. And what does this mean? You kind of put aside what it means from a financial perspective. I think you hit it on the head. Trade Desk doesn't do any deals. In their history, they've done 2 deals, and then there's rumors that they did a third. But it's buried so far deeply within Trade Desk that nobody's sure if it actually happened.
And
so
they also invested in Sincera's competitor Chalice, right? Which is sort of interesting to see. And they ended up buying Sincera.
Yeah, we should come back to that too. So the fact that they pulled the M&A trigger, I think, is impactful and interesting is number one, right? Like, this is an asset, this is a team. This is, in the case of Sincera, a data set that we have to buy rather than build. I think that's important. I think it's a very positive signal to the market, number one. Number two, it also signals the direction that we've continued to see by Jeff, who's, I think, an example of an amazing public company CEO that really understands how to drive the narrative and paint the larger picture of the future of the business and the future of the industry. That the future of the open web, quote unquote, is around quality and is around driving outcomes. And Sincera has the best data set if your goal is to, succeed in that era. So I think it's a great case study for why M&A. You're right, Nick. The Trade Desk via TD7, their venture arm, they were an investor in Sincera, and I think that's a little bit of innovation on strategy. Where they're getting perhaps the best
in Chalice, you mean?
Yeah, they're an investor in Sincera, they're an investor in Chalice, or investor of a handful of other companies in our portfolio as well. The point is, I think they're getting perhaps some of the best of M&A in terms of staying close to the market, getting companies building on TTD, getting sort of preferential access without needing to go pull the full trigger on doing deals. So I think TD7.
Well, that was a model that Aperiam came from too, with Media Math and Math Capital that became Aperiam. So,
Yeah,
I
sure.
mean,
Yeah.
they're just copying you guys again.
Yeah, we're huge fans of Jeff and Rohit. We think they are great, and we for sure will accept the compliment.
Sanja, what are your thoughts on that in the space, that type of deal, from particularly coming from Trade Desk, which is really broken out as a very separate type of company in ad tech?
Yeah, I don't know that I have much more to add to what Eric and Nick said. I think with Sincera, it's an amazing data set, and you can't sort of underpraise the team. It's a really, really good team. And Trade Desk has always hired really well. And I think in this case, they also wanted those people inside their walls. So I think it's also a big compliment to the team. That team is really good. And sometimes you fall in love with the company, coming back from a WPP background, you sometimes want the asset because you want the humans in it so badly, because they're excellent. And I think in this case, that box is very heavily checked.
That's a
So
great
I don't
point.
know that I have, I don't know that I have anything more to add to that. I did want to piggyback on something that I think Nick painted a wonderful picture for our audience in terms of stalled companies, or companies where the narrative is challenged and wanting to acquire an asset to either inject their narrative with something fresh and new and dynamic. But I also think something else is happening, and we have one example from 24, which is newer entrants wanting to help with their growth story and wanting to build a product that helps them compete with the, let's call them, incumbents. And I think a great example of that is Reddit. Right, Reddit is a newcomer. It's got a very formidable offering. They've hired some pretty notable Google execs into their sales team, like Mike Romoff, who recently joined them. And then last year, they bought a very young company. It was one of Eric's portfolio companies, so I want to give them kudos here, called Memorable. What is Memorable? It's effectively an AI company that helps marketers and brands optimize their creative. So very early on, I did not expect to see that company go so quickly. I'm sure Eric has more commentary there. But it's such a good example of, Reddit is building a narrative, it's building a sales force, it's hiring people, and it's, future-proofing its ad tech product offering. How do we make sure that our platform can compete with Meta's or with Google's ad platform, which have AI-enabled generative AI tooling within them? They have creative optimization. So to me, that's what Nick said is absolutely true. But then we also see, little engines that could recently minted, publicly traded companies who are buying smaller assets as a way to sort of future-proof and sort of bring a dose of rah-rah to their product offering. And I think that's quite interesting, and I think it's quite inspired. Because these are smaller deals. They're not deals that get talked about in sort of investment banking circles, but they're super targeted, they're super strategic, and they're really, really smart. So Eric, maybe add a bit more color, but I think it's a really interesting thing that has happened, and the ad tech ecosystem has a history of these, let's call them, sub $100 million, sub $50 million acquisitions that are done to solve a real pain point on the ad tech product side.
Yeah, no, that was really, really well said. And from an investment standpoint, if you are particular around deal terms, valuations, those sub 100 or $100 million deals could actually be quite good from a return standpoint. I think Reddit and Memorable is interesting, and I guess validates what we're talking about in two ways. Number one, every media platform needs to have their own kind of internal custom algorithm performance product. Reddit, seeing what Google did with PMax, what Meta did with Advantage Plus, what later in the year AppLovin did with Audience Plus, needed assets to jump on that bandwagon. So it was a little bit of kind of responding to market. And then number two, this is a pattern that we're seeing. I don't think it's slowing down. There is a different. There's like three breeds of founder that we're seeing in investments now. It's the repeat ad tech founder who just can't get away from this space and sees the
Those
opportunity
too
ever
much.
larger. Yeah, knows
He's
too
burdened
much,
by
right?
knowing too much. Yeah.
Is kind of thing one. Archetype two is like operators, and this is Mike and Ian from Sincera. They came out of LiveRamp and AppNexus. They just know exactly like where the gaps are that need to be filled. That's
Totally.
number two, and then number three is very much a kind of late 23, 24, 25 phenomenon. Is the AI talent that is coming out of the best universities are looking for markets that they can quickly find adoption in. And there's like historically no better market due to the prevalence of like innovation budgets and forward-leading brands and just like opportunity than advertising and marketing. We had two deals like that. Exiting the portfolio in 24, just like real AI talent, an interesting product that had yet to gain adoption. That a larger company said, "Whoa, great team, great product. I'm going to pull the trigger," and it made sense for all from an economic perspective.
That brings up sort of the concept of, the first time founder, the second time founder, particularly when it comes to ad networks, right? The second time founder building an ad network, meaning, hey, we saw Teads work really well. Well, what's this new ad unit? What's the AI component? Go out, publish your dev team, and if you know how to go crush it, like my team did and the people that I worked with and worked for at Criteo, if you know how to do relentless execution, both on the publisher side and the advertiser side, you can build a really nice cash flow business pretty quickly, actually. So that brings up the point to take back to Nick, which is, do you expect, like, let's say, for example, let's think in a cyclical wave, right? So you got a trough and a peak, and we went through a trough, 2023, not much M&A going on, maybe a couple, not much in this particular case. We're well past the bottom of the U. We're not even close, I don't think, to the inflection point yet towards the peak. We have a long run to go. Let's call it 2, 3 years.
Go with five. Come on.
5. Okay. And who knows? It's very hard to predict the future. As was said in the movie Wedding Crashers, we have no way to know about the future. We can only make decisions based on on the information we have today. But Nick, do you expect when we're at the top of the peak, which that will run its course as well? Do you expect to see, hey, you know what? Looking back, wow, the average age of the companies at exit has shortened. Meaning in ad tech, they're 10, 12 years old. That's where it currently stands. Do we expect to see after the peak 5 years, 4 or 5 years from now, looking back, wow, the average age shrunk to 6 or 7 years? Or let me ask you this way. What's the probability? Like, think about it probabilistically or expected value wise. Like, where would you land if you had to make a bet today?
Well, I think you have a much more mature ad tech economy than you did 10 years ago, 5 years ago. And so you have some very large incumbents. I think that has actually slowed some innovation, though AI will give it some new juice. But it's hard for a new company to come in and make a difference and fight against, let alone the platforms, that suck up a lot of advertising dollars, but also, some of these major standard bearers. You got the Trade Desk and Magnite and maybe Pubmatic, and some of the pieces. And so, we as investors are trying to find those companies that kind of help those other businesses, help the other companies in the sector try to build meaningful businesses in a world where there's some already very meaningful businesses, and so I don't know what that means in terms of this, the cycle, the turn cycle. I can tell you we're in our 4th year of Progress Ventures Fund 4, and we're already starting to see companies turn. And we have some, thankfully, inbounds, which is great. Whereas, I was a 12-year investor in MediaMath, so I don't know. I mean, it's hard to say. It's hard to predict the future. We just deal with what we have in front of us. I'm sorry. I think you're right.
Yeah. But Eric and Sanja, I mean, do you expect the age of companies to decrease over time from the point of birth to exit in ad tech?
As investors, let me ask it differently. As investors who are judged on IRR, do you think that companies will turn faster?
I sure hope so.
Okay, good answer.
Yeah, I think I'm optimistic on that front, but back to what you said, Nick, we're dealing with humans, and ultimately the founders have a lot of influence over that timeline, right? Even if you're a very large shareholder, you sit on the board, you're close to the founders, you're not going to force anyone to sell before they're ready to sell, unless the company is in a tough spot. But at that point, you're not optimizing for an outcome. It is what it is. So I think I don't like it when we get abstract about these things, because we're dealing with someone's baby. All these companies. Eric is a really early investor. I come in at A and B. So if you think about the continuum here, it goes Eric, Sanja, Nick. And the reality is that, there are much easier ways to make money than to start an ad tech company. So every single one of our founders is choosing a choice that is less economically beneficial for them in the short run. And you must be respectful of that choice. I am, as an investor, very respectful of that choice. And our job is to choose well. And once we have chosen, once we have entered that marriage, and I tell my founders, you're going to hope you like my face, because you're probably going to be looking at it for the next 7 years. Once you've made that choice, then you shift into support mode. And, what can you do to help the company grow? What introductions can you make? Can you be a shoulder to cry on? Can you introduce them to other funds? Can you be a great brand ambassador for that business model, for that category? And so at that point, I sort of, I think about that exit horizon, and obviously we all go through an underwriting process, like how much money can we possibly make off of this at the onset. But once you have done that, you've done the brain work, you put it on paper, you shift into a different mode. And in that mode, you're in a partnership with the founders. So it's becomes much more of a, like in a marriage, it has to be a compromise, timeline of when you decide to do things.
I totally agree. I mean, I personally invested in probably 50 companies, but 35 in Progress Ventures. And whether they're up or down, you just say, I'm so glad I have a portfolio, because it really is about, you never can predict the one that's going to be the one that returns the whole fund versus the ones that, just kind of just teeter along. And I think that's kind of the fun of it. But it can be very frustrating, because to Sanja's point, you may see something as an investor advisor to the company, and the CEO just may say, like, well, we want to keep on going. And I think out of respect for their commitment, their investment. I mean, they're investing with their feet. We may be investing with our dollars or somebody else's dollars, but this is their livelihood, and we have to be highly respectful of that. And so, great point, Sanja.
Eric?
The reason to believe that we might see a shortening of the cycle is because of AI. Right. I think Nick brought up a really good point that, there's some dynamics that have kind of kept things constrained to some of the most powerful companies. And those dynamics have not shifted until quite recently with AI. What's ahead of us with AI is the first that we've seen in our careers, where it's, number one, a platform shift. Right. So first platform shift that we saw in our careers was the internet, which today it's been the biggest thing that we've all seen. But it's also a technology shift. So we're now dealing with a way that is going to change how consumers interact with media and ads. And incumbents are, by definition, incumbents. They are the ones that are going to be disrupted. And then on the other side, it's going to change how the entire infrastructure and workflow of this industry works. So I think, and you both made really good points about how, like, we need to realize that we can't predict anything, and this is a very humbling profession that we've all chosen from an investment standpoint. But I also think that we're kind of entering in an era where you kind of have to believe it's like extreme change, extreme risk on, and things that we haven't seen in the past could happen. So I think we need to be prepared for a super cycle, so to speak, with respect to shortening of timelines, new winners, path to $100 million in revenue being radically shortened, because we just don't know.
Yeah, I would.
Great point.
I would totally agree with that. We invested in Runway, and I would say the acceleration of that business on the revenue front, it's bombastic is probably the word I would use. It's just goes from zero to undisclosed number in a blink of an eye. And there, our jobs are difficult because you, like Eric said, you have to be brave. You have to sort of assume that this is a paradigm shift. And you also have to, like, the only way you're going to get comfortable with the decision in AI is if you feel like you've picked the winner. Because the reality is, once a business takes off in the AI space, they accumulate such data, they accumulate such case studies that it becomes very difficult for the also ran to break through. So I would say everything is kind of exponential in this segment, which can obviously result in great returns for venture investment, but it can also result in some pretty poor decision making. So it is. I totally agree with that, Eric. I totally agree.
Yeah, I think a good point too is the pairing of AI with somebody who really knows how the system works is probably a good idea. So your Sincera example, maybe. I don't know how much AI is in Sincera, but more to the point of just there are certain people who know how this whole world works and understanding the gaps. And I think that, if you can find those kinds of companies, those are the ones that I think have a chance to break through and shake up some of these monoliths. I'd say also the category, my partner, Adrian Zermulan, who you all know well, will say that he really believes that retail media, bringing the consumer closer to the transaction, is a real threat to Google. And I think that's a really good point. People, if they can get that much closer in the experience to the transaction itself, I think that takes out the kind of search middleman. So I think actually Google is, as much as it's in AI itself, has some real soul searching to do for its future.
Yeah, and then there's Google, and my question there is like, I mean, how long can a company maintain that type of dominant market share? I mean, let's like not get into the DOJ case and all that stuff, but when you think about like Coca-Cola in its prime had 90% market share, and along comes this company, Pepsi, and people said no way. But one thing my dad always taught me was, give me a company with big market share, and I will tell you, will go nowhere but down in the future, right?
Yeah.
And that's just normal economic cycles.
And it's people.
Yeah.
And it's people too, because there are different types of people start these businesses. Then there's like a whole nother type of person who works in a big company and knows how to manage lots of people. And I think you see innovation just start to sort of erode away.
Yeah.
And I mean, I think Google has been amazing in its ability to attract innovators and so forth. But another point too is these big companies have been really precluded from making many acquisitions.
Yeah.
Because of the DOJ and because of the regulation. And I think that is an advantage to the up and comers, right? They can go make acquisitions without too much trouble, and they can innovate through M&A. Whereas when people come to me and say like, "Oh, I want to sell to Google," I was like, "Well, that said people 10 years ago, but I don't know about today. That's hard to do."
Here, I just wanted to go one last point around companies like DoubleVerify and IAS. Very, very, very well positioned to make some acquisitions. Taboola and Outbrain also come to mind, meaning you spend 10 years, the last 10 years, right? Aperiam would be another one, the company that Eric sold Undertone to. You spend the last 10 years, you've got thousands of publisher customers, you've got thousands of advertiser customers. What an asset to have. What do you go buy with that sales army to go reinvigorate and bring some sort of oomph to these companies that clearly need it? They're public. We can all see their numbers. But that's something that I would definitely be looking out for, of what the signals of what they go after and how they're going to reinvent on top of really what are very valuable bases.
Yeah. I'll just jump in quickly and say, do something is really, my wish to all these companies. Don't just sit there and expect it to get better. You need to chart a path for your business, and I think that in particular, DoubleVerify's got very, very strong leadership. So I'm I think they're on a really good path in spite of, their stock is challenged, and I know it's a head scratcher for them, and it's frustrating for them, but they are really coming out the winner. We were actually original investors in IAS way back, and we sold when Vista bought them. So I've seen that company from the beginning, and I'm frankly disappointed, I guess, that it hasn't continued to grow. I mean, we haven't been in it, but at the same time, I think it's got a lot of turnover right now in management. So let's see what happens. But I think that one's more challenged. Taboola and Outbrain is a great example. Outbrain going and buying Teads is like, that's a move.
And Taboola with the 30-year deal with Yahoo is a great move.
Yeah, I mean, so like these are companies that are doing something, and I think coming out of being that sort of irrelevant, I think that Aperiam has got some challenges, and they're right now trading essentially for cash, and they have, I think, 600 million in revenue, 75 million EBITDA, and their market cap is 415, and have 400 million in cash. So I think that's the market saying, "What's your plan?"
Yeah.
I just want to say too, and I think we have left this out, and I don't know why, but I think to the point of our host, ID5, I think identity is also critical, and I think that's an area where a lot of companies are. I mean, I think the Audigent deal is a little bit about identity, the Hadron ID in there, and I think identity is really a key thing. I know that everyone's sort of assuming that the cookieless future is coming eventually. Regulation is a slow process, but it is coming. And I think that, ID5, I'm just cooking my own book here, of course, as we're very happy investors. And by the way, really one of the best CEOs that we've ever worked with in Matthew. Is a really solid guy. But I think that company has a great future as well. So.
Yeah. And it's not just about cookies going away, regardless of whether or not cookies go away completely, right? Because a lot of them are already gone, depending on what environment you're in. It's just that much more performant. So as a former marketer, you want to do this because your media dollars will go that much further. So don't be lazy. Don't assume. Yes.
Yeah. And
don't be lazy. Don't assume it's enough.
Yeah. And they're making a very strong push into CTV as well. So that's going to be a big hit for
enough cookies had already gone away where the market is there. I mean, to the performant case, I mean, kind of in that particular thing from an executional, operational, anybody executing campaigns, to me, it's like, do something, but don't keep doing what you've been doing because you're wasting a lot of money. There's great alternatives out there. And you are right. I mean, Matt being a friend as well. I mean, Matt is awesome. What a wonderful CEO. When you meet enough people in this space, you know what you see when you see it. So excellent. Well, thank you guys. This has been great. Thank you to ID5 for bringing this together, and thanks to our guests here.